Well, this is a bit of a disappointment for those who are hoping the Fed doesn't move interest rates, or actually hoping the Fed does move interest rates, because inflation comes in faster in the PPI than anticipated on a headline basis, up 0.4, which pushes the year over year to 3%. Remember, you were just suggesting that the consensus was for 2.6, so this is a big jump over 2.4 last month. Core comes in up 0.2, which is what was forecast. That's down from the 0.3 in the month of October. And the core minus trade services as well is only up 0.1. So you put those all together, and it isn't as bad as that headline number sounds. We'll have to see what pushed that up. On a year-over-year basis, final demand, as I mentioned, 3%. Food and energy core, 3.4%, up from 3.1%. And ex-food, energy, and trade, 3.5%. Now, jobless claims, here's an interesting one. 242,000 jobs, a big jump in jobless claims after 225 the week before. So there is a case here for weakening in the labor market that perhaps the Fed wants to take a look at when it considers whether to cut rates or not.
Mike, I'll let you dig through some of the details right now. Here's what you're seeing in markets. Kind of interesting. Seems like bond traders are taking more of their tell from initial jobless claims than they are from the inflation read across PPI. Yields lower across the board. On futures, you are seeing an extension of those declines, but the yield space is what I have my eye on. Two-year yields actually now lower on the day to 4.15%. Again, initial jobless claims coming in at 242,000 versus the expectation for 220. What you can see across the board, ongoing dollar strength, but it's not because of the U.S. side of things, and that is the interesting aspect. This is about it being worse on the other side of the pond, but lessening some of that dollar dominance that we saw immediately after the ECB rate decision. Mike, just want to get your thoughts on why we seem to be seeing a market that is focusing much more on the jobless picture and initial jobless claims than to the fact that PPI came in significantly hotter than we previously expected.
Well, the market is looking at what the Fed might do, and the Fed has talked about its concerns about the labor market weakening as their major sign of weakness in the overall economy that could be coming. So they're going to react to labor market data more than they will to perhaps inflation data. And of course, PPI doesn't translate specifically into CPI. And this is just the headline number, and there is a very good reason for it. And I know Anne Marie's going to be interested in this. According to the Bureau of Labor Statistics, the jump in the headline number was 80% because of final demand foods. And as far as that is concerned, 54.6% jump in the price of eggs. Now, remember what Donald Trump said the other day. He was elected because of the price of eggs. We saw a little bit of this in the CPI, but that's a rather huge jump for egg prices.
Thank you, our chief egg correspondent, Michael McKee, for that update.